Hey everybody, what's going on? It is James here with Crypto Common Sense, aka 3Peach Trading, and today's video is going to be a short one. We're going to talk about Bitcoin and QQQ, and we'll keep it simple. So several days ago, I did a video. At the time of that video, Bitcoin was sitting up around $108,000 or 106, somewhere in that ballpark. It was essentially at the top of this little bounce. And in that video, I said specifically that was good news if you were in a short-term long from down here, or potentially good news if you're looking to short because it gave a better entry. And at that time, I was saying that I suspected that pump was probably this pump in the beginning of phase E. Since then, of course, Bitcoin has melted down. So that is the difference in trading and investing right there in a nutshell. It's not about hating Bitcoin or loving Bitcoin. It's about seeing patterns in charts, using volume confirmation. For example, we saw there was high selling volume, but very little interest in buying. I talked about volume impetus, how that, pointing toward distribution, non-accumulation, blah, 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 right? Talked about all that. And so somebody who took that trade could have made a quick $10,000 to $12,000 per Bitcoin. And depending on their risk, they may have set up a trade that looks something like this. Like they may have said, hey, I'm going to short it at this level of supply, right? Because markets run on supply and demand. And they may have said, hey, I'm not going to give it a real wide stop up here. I'm going to give it a tighter stop. And basically just, I don't want it to break through supply right here. So maybe they said something like that. And if they're still in that trade, they'd be up about, almost 4R. Maybe they said, hey, I'll close it when it gets to the bottom of the range, take it 2.5R. Maybe they even said, hey, I'm not sure if it's going to do something like this, where it goes up, pulls back, and then continues up. In which case, maybe they said, hey, I'll take a 1R and I'll just scalp it. Maybe they had a trade like that. Maybe they did take a wider trade. Maybe they said, hey, I do think it's going to go down, but it may, go up and try to clip some stops, do some stop hunts. So maybe they did give it a really wide stop. Maybe they said, hey, I'm going to set my stop way up here. Or maybe they said, I'm just going to go for a 1-to-1. And they had a trade that looks something like that. Maybe they say, hey, this is phase E and I'm going to ride this baby to the bottom of the bear market. If we are in a bear market, which we don't know, but that's where I lean toward. And maybe this person is thinking they're going to take a trade that looks something like this, where it just goes down and retests these lows back here. We get almost 3R for that. Or maybe they have a whole lot of courage and they're very committed in this position trade and they're going to try to ride it down to, what they feel is the next bear market low, maybe somewhere down around 50K. And they're going to get almost 6R. Maybe they think it's going to go to $1,000. In which case, they might be able to pull it down and get something like this, where they're going to get 11R, et cetera, et cetera. The point being is, it's really not about predictions, right? Because you can have 10 people who are all bearish and 10 people take shorts, and they all look differently. And that's the really key thing to remember about trading. The other thing is, a lot of people don't understand this, but it's critical to understand. Bear markets are not as fun to trade. Even as somebody who is, calling for these bearish moves and things, it's not as fun to trade a bear market because the upside is not as big. As an example, just look at this trade. Let's say that I did short it there and put a stop loss up here. And let's say that I was able to ride it all the way down here. That's basically a world-class trade, but it's only about 11R. And 11R is really good, don't get me wrong. If I risked $1,000, that means if that happened, I'd make 11,000. But it's really nothing compared to a bull market. You look at a bull market and say somebody longed back here, and I actually did long back there around 16.2, if I remember correctly. And let's say that at 16.2, I put a stop loss of, let's say a 50% stop loss. I put an $8,000 stop loss. So say my stop was around $8,000. Well, by the time I got to the peak over here, look at this. That was a bad example. That's only about 12R2. But typically with bull markets, that's a 50% stop loss. Typically with bull markets, you had a lot more upside. Like maybe my stop was, like 10% stop, for example. And 63R, right? So if I risk 1,000, then, maybe I made 60,000, for example. So bear markets are just not as fun. They're not as profitable to trade on the swings. And so, there's really no motivation for somebody to call for a bear market unless they actually think there's a bear market, or there could be some edge cases and things. So when I'm sharing all this with you, I'm just sharing it because it's literally what I see in the chart. And it doesn't mean I'm right. I could be wrong, but I've been pretty spot on with this. I've been saying for several months now that this was likely distribution. I said the hits here was probably going to be a dead cat bounce. It was up to about 118,000. It dumped. I said this is probably going to be a dead cat bounce. This is potentially a place to look for shorts. It was. It dumped. Right. This just looks like distribution. And again, I'm going off of the chart pattern itself, but also the volume confirmation, seeing a lot more selling volume than buying volume. So for right now, until proven otherwise, this is going to be my stance on Bitcoin. Again, this here is not a macro distribution. This is more of a localized distribution. So if it has a markdown phase, it doesn't necessarily mean, it's probably part of a larger, bear market is my opinion. But this here is really just saying that the markdown phase may take it back down around like 75 to 80,000. Okay. Because this is essentially how I view this: markup, distribution, markdown. This is not the whole market cycle distribution here. So we'll jump over to a Bitcoin versus QQQ chart and take a look at it. And again, this one's more concerning because this here is macro. This is less, zoomed in, less localized. And like I said in one of the previous videos, this has not been bullish. It's just been down, down, down. And so this does look a lot like a potential distribution pattern that could take this back down toward the bottom of this channel, which of course would mean a bear market. And of course, it would also mean, a difference in behavior for Bitcoin compared to previous bull markets where it made these huge euphoric blow off tops versus the QQQ. So I think that's why it's throwing some people. If it does that, I think a lot of people are just like automatically assuming it has to have blow off tops like this every time, but I don't think so. If you look back at some of my posts from 2021, I actually predicted back then that I thought that Bitcoin was in a macro distribution cycle. So we'll look at that really quickly. So what I essentially said was, I felt like this would be like buying climax, automatic reaction. I felt like this was like an upthrust. Again, I was posting this back in 2021. And what I expected to happen at the time was I thought it would have a pullback. I thought it would have a last point of supply bounce and then start like a macro markdown. And I think what's happening instead is we got, there's two different schematics for distribution. And the other schematic is what's called an upthrust after distribution. And I think that's what this is potentially over here. And then I think we, could get something like this. So that's kind of what I'm watching. I do feel like Bitcoin, I used math, of course, a lot of what I do is quant trading. So I used math to predict the lows back here, which was actually in August that I predicted that. And I used it to predict the highs up here, which again, I made those calls in October of 2019. I called the low and the top. I used a diminishing returns model to predict that. And so if you do notice, like, we're getting an upside down parabola, basically an upside down curve where we are having, it's not really a parabola, but we're having diminishing returns where each cycle is producing smaller returns versus the previous cycle. And so I do suspect that Bitcoin may, again, be in for some different behavior going forward. Everybody's just assuming it'll be another, dump and then straight back up to new highs. Could happen, but I suspect we may see some different behavior. Remember, these posts that I make, they always sound absurd in the moment. And a lot of people give me, flack and get frustrated with me and call me names and all kinds of things. Less so anymore with the name calling because I'm not really active on social media a whole lot. But it's always this way, guys. It's only in hindsight that people are like, oh gosh, he was right. So for example, this chart you see down here, this was a chart that I posted in the summer of 2018. This post was a year later talking about it, but this was posted in the summer of 2018. And I was calling for a low of around $3,000 on Bitcoin. And I was predicting that it would happen in November. Now, at the time, people were like, you're nuts. The bottom is in, 6,000 was the bottom. It's going up, blah, 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 blah. But what actually happened was it, of course, bottomed right around $3,058 in the middle of December of that year. So again, nailed the timing and also nailed the price. This post was on August 24th, 2019. At that time, I said, I feel like Bitcoin is going to hit a low of $4,200. People did not like that. And again, in this post, I was talking about getting 9 kinds of hell for not drinking the crypto Kool-Aid. People called me all sorts of names. There was actually a guru on Twitter with like 100,000 followers who called me out specifically by name, tagged me. You know, I was the laughing stock of Twitter for a moment there, right up until March of 2020 when Bitcoin fell to that target. And I'm not pointing that out to be like braggadocious. And I know I talk about it in several videos, but it's because every video has new people watching it that don't know about this. I'm pointing it out because I'm not a perma bear. I'm just a guy who trades markets differently than most people and views markets differently than the average retail trader. I am a quantitative trader. I trade the charts. I do not trade hype. I do not trade FOMO. I do not trade hopium. I only trade what the charts are saying. And I'm not right 100% of the time, not even close. But I've had a history going back until from, the time I started in 2017 until now. I had a history of nailing these market movements on the macro time frames. And right now, I feel like we have entered into a bear market on Bitcoin. Again, not a guarantee. I said in one of the other videos that, when I'm sure something is typically about 70%. In this case, I'm probably closer to 85 to 90% at this point, just because we have so much confirmation showing up in the chart itself. But it's still not a guarantee. It's still not a reason to throw risk management out the window. It's a reason to take a look at the chart and do your own due diligence and nothing more. The video is very long compared to what I expected, but let's still take a quick look at QQQ because QQQ was not kind to people. Oh, sorry, the hiccups. QQQ was not kind to people. QQQ was a real dirtbag over the last week. It went down. It had this little bullish pattern, the abandoned baby pattern. It should have kept going up if the pattern, worked out. It didn't. It put in this inside candle, which on a smaller time frame would have been representing a flag, which again was pointing more upside. And then next thing you know, it has this ugly candle, which should have been a big warning to everybody to be very careful, and then gapped under the range. And that right there was a huge sign. If you were day trading this or intraday trading, gapping under that level right there should have been a big waving flag that, hey, if anything, make sure you're looking for the downside, not upside here. Huge dump, huge gap down. I mean, a huge gap down for QQQ today. Look at this. Opened down almost 1.5%. But it's still very, very tough to trade this on a swing trade or to try to predict what's happening, because even though it did gap down huge, it snuck below this previous low and then immediately had massive buying volume, sent it right back up. But volume on the chart, look at this, huge volume. And I'm not saying huge like relative to like every other day. It's not like some huge outlier, but we didn't see like just a dribble of volume where it's like, okay, there's some buying, but very little selling. And that's why it's going up. No, we saw definitive buying volume here, and it immediately filled that gap. Could it be a dead cat bounce for more downside? Absolutely, it could. But I feel like that's a 50-50. That's at best, it's a coin flip. I have nothing there that says, hey, I can take a swing long, or hey, I can take a swing short. This very well could have been a trap for bears, and then they got punished and pushed back up. But this could also be, liquidity grab, where people who are trying to short want to push it up first, so retail starts longing and they can, empty their bags. That's very, very tough. Okay. But what we are seeing is as anxiety grows, the first thing that happen when anxiety grows in a market is risk-on assets are the first ones to sell off, and the riskiest assets are the first ones to go. And that's why we're seeing Bitcoin completely dumping, right? Like, let's not sugarcoat this. Bitcoin right now is down from its high. It's fallen over 25%. That's not nothing, okay? And right now it's sitting down about 24.5% or $31,000 per Bitcoin. Now, it's not a guarantee that it's bear market, okay? It's not. And I want to be clear about that. Even though I'm leaning heavily that way, this is not a guarantee of the bear market. Like, you do sometimes see 20 and 30 and 40% pullbacks in a bull market. Bitcoin historically has had that plenty of times. What I think, though, is we're seeing this underneath the 19-week moving average, which is not typical bull market behavior. We're seeing our 19-week moving average curling down. If we go back to a daily chart of Bitcoin, we're going to see that, well, where's my daily chart of Bitcoin? Obviously this looks like distribution through here. If I put a 50 and 200 on here, we're saying that the 50 is curling down hard. The 200 is starting to flatten out, and we are razor close to getting a potential death cross. Now, a real death cross, the 200 needs to be sloped down or at least flat, or like sloping down as a true bear cross or a death cross. And right now it's still slightly sloping up, okay? But over the next few days, we'll have to see what happens. If this flattens out and then this crosses it, that's a death cross, okay? And death crosses, they're liquidity grabs. So be very clear about this with you so that you don't get yourself in trouble. A death cross doesn't mean the market goes straight down. A death cross means there's going to be a high liquidity event more than likely around that area. Sometimes that's a fast and hard sell-off where it just completely dumps. But sometimes a death cross is actually the bottom of a move and it traps bears. And so you need to be mindful. And I'll give you a quick example of that right here. See this? This was a death cross. A lot of people start panicking because, oh, it's a death cross. And it was literally one of the best places to buy Bitcoin in the last, 12 months. So watch this and watch volume and say, what's going on? See how this death cross occurred right here? And look at the volume. Huge buying volume right there. See it? That was a telltale sign that that was probably going to move back up. If this death cross occurs, watch what the volume does. It doesn't guarantee anything. It just gives you breadcrumbs. So do me a favor, stop now, give the video a thumbs up, subscribe to the channel if you haven't already. Make sure you click that bell icon so you get notifications when I release new videos. Leave me a comment letting me know what you think about the markets. And as always, please remember that I am some guy sitting in a spare bedroom. Nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. Thanks for watching. I'll see you in the next video.